We're going to head to Washington, D.C. because in a speech earlier today, the IMF's Christine Lagarde said the global economy appears unsettled and warned of growing risks from the U.S.-China trade fight. She joins us now from Washington, D.C., along with Yahoo Finance's Miles Udland. Miles?
Thanks, Adam. Madam Lagarde, thanks so much for joining us. I want to start with, I think, the headline from your speech today about the delicate moment that we're in for the global economy. What concerns you most when you look at the landscape right now?
What concerns me most is that the reason we are at this delicate moment has to do with self-inflicted wounds, if you will. Because what we are seeing now is lack of confidence, lack of trust, uncertainty by the business community as to what the landscape is going to be. And it has a lot to do with the trade tensions. That's number one. It has a lot to do with country-specific issues, like Brexit, for instance. And this can be remedied, but it can also not be solved, right. And therefore uncertainty would continue, which is particularly annoying because we were in a very nice spot a year ago. You know, a year ago I said to all the finance ministers and central bank governors, you know, sun is shining, growth is good, forecast is high, fix the roof. Do the structural reforms that will actually help your productivity, that will help your long-term growth potential, and everybody will be in a better place. We lost that.
It's funny, that was the theme that came up a couple of times in your conversation this morning. You're a former finance minister. Is it almost in the nature of politicians to ignore when times are good and to not pay enough attention to fixing the roof, as you noted? Because here we are, just some 18 months later, and the situation is quite different from when we began 2018.
It's unfortunately often the case, and it's the frustration of a finance minister, because you see the situation improving, you see the revenue rising, and you feel like doing the counter-cyclical things that you should do, which is to build buffers to make sure that you have some reserve for the rainy days when the next crisis comes. But when revenues are rising, the other ministers and governments in general will say, well, we need to spend. We need to build schools. We need to improve hospitals. We need to pay more wages. And that's the constant fine line that has to be drawn between continuing to support growth and yet being very mindful of sustainable debt and being really focused on the right public expenditure. That's also a big issue.
Yeah. I want to go back to trade for a second. You shared some very interesting numbers. So if we had a 25% tariff on all trade between the U.S. and China, 0.6% of GDP would come off U.S., 1.5% off of China. But do you think that might understate the actual risks? Because I think those GDP numbers, they are quite large in terms of a total number of total amount of trade. But are there kind of knock-on effects that we may not be seeing right now if we don't have this trade fight resolved?
You're absolutely right, and that's what I call the confidence effect. When economic operators, particularly corporates, but also households, are not too sure where it's heading, they don't freeze, but at least they suspend investment projects. We have really established a very strong relationship between trade and investments. And the research that we will be publishing in the next couple of days really shows that trade boosts investment, trade boosts productivity, trade boosts employment. If you put a brake on that, if you start questioning whether there will continue to be that trade and that global trade, then you put your growth at risk, you put your employment at risk, you put your investment at risk. And investment is key at the moment. It's relatively low, it's quite weak actually, and we don't need a trade war or trade tariffs, which are not particularly helpful and efficient to put yet another brake on investment.
Now, another uncertainty is Brexit. The negotiations have carried on for quite some time. It still appears unclear exactly when that will be resolved. How much is that hanging over your discussions at the IMF and trying to get a sense of where the global economy may be headed? Because certainly if you are in the euro area, if you're in the continent of Europe, it's very difficult to decide on a new headquarters, investing in new staff and things like that.
Yes, it is difficult. And again, we are dealing with a level of uncertainties that has hardly been seen lately in that whole European Union. You had new members, you had fiscal issues, the Growth and Stability Pact not exactly in sync with, or countries not in sync with the pact. But the threat of a member leaving the Union, which was not initially considered and which is made complicated by the process, in such a state of uncertainty and creating so much doubt as to what comes next, where do investments go, how is trading taking place. Luckily, the financial authorities, I think on both sides, the EU, the euro area in particular with the ECB and the supervisors, and the financial authorities in the UK have kind of settled those issues. But in non-financial sectors, it's a lot more uncertain, and there is a lot more concern on both sides.
Yeah. And now I want to drill down a little bit on your view of the Chinese economy right now, because I think we're talking about it often here in the U.S. through the lens of that trade disagreement, but they're doing incredible amounts of stimulus right now to try and generate more growth. Do you see any spillover effects if we do in fact see an acceleration or a deceleration, I should say, in the pace of growth in China, a downside surprise in the world's second largest economy?
Well, the Chinese stimulus has been instrumental in sort of keeping some momentum. As I said, momentum has slowed down. We're seeing it slowing in about 70% of the global economy. But luckily, China has actually stimulated. And they've stimulated while transitioning to this new model, which is less focused on exports, less focused on investment, and more focused on the domestic market and consumption. So while they are stimulating, they're also trying to rein in the excess credit that was available, say, a year ago. So it is also for them a very delicate moment and a delicate policy mix that they have to operate.
All right, Madame Lagarde, thanks so much. Adam and Julie, I'll send it back to you. I will continue my conversation with Christine Lagarde, Managing Director of the IMF, and you'll see that later on Yahoo Finance.
All right, Miles Udland in Washington, D.C., thank you.